Now look who's here to cover the market for us on this auspicious day. None other than David Nicholas with his onset in New York. Futures rallying, 800 points up for the Dow Industrials. Does this rally last?
Sure, this is a big deal, right? Inflation data came in much lower than expected.
Does it last?
What do we have this week? We have the FOMC meeting this week. This will set the tone for the markets going into next year. But remember, we had a much hotter than expected jobs report, 263,000 jobs. PPI data came in hotter than expected.
I repeat the question, does it last?
I think we could still see 75 basis points hike this week. So that would bring the party to an end.
Does the stock market rally last?
It doesn't. It doesn't. It doesn't. The market is way too optimistic here, Stuart. I think we haven't even begun to see earnings downgrades that could be coming. I don't want to rain on this party, but my fear for next year is not inflation. It's now credit quality for corporations. And I think this is why it's so important to know which bonds you own in your portfolio. You're going to want to be owning government bonds and not regular corporate bonds, because I think we're going to see earnings downgrades next year, Stuart.
You don't like big tech at this point? I mean, it's through the roof this morning.
Yeah,
Microsoft is up more than $10, for heaven's sake.
Yeah, no, this is fantastic.
Well, is it going to come down again?
That's great. And Stuart, here's the issue: is we haven't really seen the damage yet for earnings, and so we want to own companies that pay us dividends and income, which is why we're owning bonds and treasuries that pay us interest to own stocks, because I think that's going to win. Where are the earnings expectations for the S&P for next year? The average analyst number for the S&P for the end of 2023. 4,050. That means it's going nowhere next year, Stuart.
So you think that bonds are a better deal at this point than stocks?
I think they're a much better deal. And this is why we actually created a bond fund for this very thing, to own bonds in this environment that can pay you interest, Stuart.
I think Oppenheimer called 12% up for the S&P by the end of 2023. That's pretty significant.
I think from a couple of weeks ago when the market was down, we've already come back up.
They called 12% higher because the Fed might not have to be as aggressive.
Well, they're a voice in the wilderness, because if you look at the average, it's not promising for next year, Stuart. It's not.
Okay. You've rained on the parade.
Yes.
Sorry. I'm sorry.
You've successfully destroyed the excitement I was trying to build. But no, seriously, if that's your perspective, that's your perspective. And I welcome it on the program. Thank you very much, Dave.